Hi, all. It's Catherine Burgess with Burgess Group Compass. We're talking about last week's Boulder County real estate numbers, nationally, what's happening with rents and mortgages, and then how that relates to our local market. So last week we had 129 new listings come to market. That was 30 or 40 more units than we have seen in the last 3 years for that same week. So that was a really great increase in inventory for our market, which sorely needs inventory. So under contracts, in contrast, were kind of low. They were at the same level as 2018 and 2019 at 90, and about 10 lower than 2020. So do keep in mind that that was Labor Day weekend. That may have been a quieter time. Maybe after all the COVID, tons of people were out enjoying the weekend. We'll have to wait and see if that's a trend that we continue to have a lower under contract rate, but from what we're seeing through showings, etc., that is not how we're trending. We'll keep you posted on that. Month supply of inventory, we were at 1.52 months supply of inventory last week, in contrast with 2018 where we were at 1.82, 2019 where we were at 1.5, and 2020 where we were at 1.11. So still within the historic normals, and that is tremendous given that we have more buyer activity than we have had in previous years. So really good. From a price band perspective, we had a huge amount of shopping happening in the $1.5 to $2 million range, and that's been for several weeks. So that may feel very shopped out. In contrast, the 2.5 and above and the 0 to 500,000 has been a little bit quiet for a couple weeks. So you may find more inventory there and feel like, woo, we can go forward. And then the rest is sort of, it's been pretty balanced. So nationally, you're gonna see in the news, possibly if you follow this kind of thing, that a lot of indexes have just published information about rental rates versus mortgage rates and what's been happening with those. So for example, the CoreLogic Single Family Home Rental Index has just reported. And when you look at all of these indexes together, you see that nationally, rents have gone up. Mortgages have also gone up because home prices have been appreciating so much. And so this goes back to that buyer demand piece. There are additional households that are being created right now as a result of young adults coming to the marketplace and divorces primarily. So we are seeing this increased need for housing units, which drives prices up. So it can be daunting to look at some of those sale prices and think, how are we going to make that work? And so the trick here, and especially when the rental rates have also gone up, but they've gone up at a lower percent. So when we talk about when we're looking at all of this, do keep in mind that there are non-tangibles there. So for example, the appreciation that you get from if you purchase, also the tax benefits that you get if you purchase, those go to the landlord or they go to the homeowner. So that is something that you can't see when you're contrasting those lines in a chart. And then the other thing to really keep in mind as you're evaluating, do we want to wait it out and buy something a little bit later when we have more, sorry about that. The other thing to keep in mind when you're evaluating, do we want to wait it out and save a little bit more, or do we want to go forward and buy right now? If your income is rising at 3% a year and the housing market is rising at 6% a year, for example, your buying power will diminish. So we've had buyers in the past say, we're not happy with what we're seeing at the price we can afford. We're going to take 2 or 3 or 4 years and rent, and we're going to save more money so that we can look at a different level. And then when they start looking at that next level, they're often surprised that what was this price previously is now this price, and they're shopping essentially the same homes that they were shopping 4 years ago. So it can pay to get into the market at whatever level. This happens, you know, for buyers at the 2 million, it happens at the 1.5, it happens at the 500,000. So just keep in mind your income needs to rise higher than the appreciation in the market. So call with questions. We're happy to be a resource, and sellers, as you know, it's still a brilliant time to bring your home to market. The buyer demand, as seen through our total year-end under contracts, is higher than it has been significantly in the last 3 years. So at some point that buyer demand will start to diminish as our national migration needs get filled. And so we don't know exactly when that'll happen, but that makes this fall seem like a very strong time to go forward. So call, we're happy to be a resource. Please like, subscribe, and share. We'll see you again in 2 weeks. Thanks.